Awesome. Hello, everyone, and welcome to this video. As I said, my job now during coronavirus season is to make sure that you're having some accurate information so that you can start making some decision that will help you with your cash flow during this time. I have Mark Witte with me today, and he's a loan officer at Northpoint Bank, and you have heard that rates are down right now. So I want to be able to talk to Mark so that he can give you a lot of information on what are the opportunities that are out there as far as refinancing new purchase, how to reduce your mortgage payments so that if you're pressured right now due to this crisis, or if you want to go ahead and take advantage of the rates right now, then you're able to do so. Hi, Mark.
Good morning. How are you? It's good to see you.
I am doing good. Work from challenges with my guest today.
Your assistant. Cool.
So let's talk about the rates, Mark. So rates are down now. So what are you seeing your clients are able to save right now?
So as of yesterday, rates come out for us about 10:30. So today's rates, just looking at the futures market, look like it will be even better. But we're back in the low threes on 30-year mortgage. And we're even quoting in the twos on a 15-year fixed mortgage. So, I mean, it's rates probably, there's not much room for them to go lower. I mean, it's the best rates in history. So, yeah, we have a lot of people very happy, and the phone is quite busy right now.
Okay, wonderful. And for people who are rushing to refinance, what sort of a dollar amount benchmark would you say would be a good idea to refinance, or if there's other opportunity to basically take some cash out of your home if there's equity? So where are you seeing the biggest opportunity?
So we had a refinance push towards the end of last year, where rates came down and then they started to trickle back up. We saw a couple of Fed funds interest rate cuts. Specifically, last weekend we had the emergency one over the weekend to deal with the COVID-19 crisis. But rates are back in the low threes. So if anyone's above 4, that's a definite. You need to call someone to look at refinancing.
Right, and you had mentioned that also people are able to cash out. Can you explain what that is?
Sure. So a cash out is a loan, and there's two options. You can either, if your interest rate on your first mortgage is above 3.5, 3.75, depending on where the credit score is, that's an opportunity to look at taking some of the equity that you've built up in the house over time and get a new loan with new terms at a fixed interest rate, and then you use that money as your cash out. So most banks will have a limit to where that lies, depending on whether it's a primary or an investment residence. But easily most banks will go to 80% on the cash out. So that's at 80% equity, you would, as an example, a $200,000 house at 80%, you're looking at a loan balance of $160,000.
Okay, awesome. And then you're saying that some homeowners are able to, even that are in a lot of credit card debt, are able to basically use this cash out opportunity at a much lower interest rate to basically pay off some credit card and have that rate drop from 9 or 20% down to 3 point something.
Yeah, at mortgage rates at 3 and 4%, that's much less expensive out of pocket each month and over the life of the loan and interest than a credit card at 9, 10, 15. I think some are up in the 20s. So one of the things we try to do with our clients is talk to them about that. In applying for a mortgage, your credit report's run. We take a look at that to make sure you qualify. But in seeing that, see department store credit cards at high interest rates and Visas and MasterCards. And so we talk to clients about, well, paying off those higher interest debts with some of the cash from a from a cash out refinance. And in that, you're not saving $50, $100 a month on your mortgage. You're actually saving hundreds and sometimes thousands of dollars out of pocket.
Yeah, and this cash out, that's different from the home equity line of credit, right?
Correct. So a cash out can be either a first lien or second lien. So you can either do a cash out with your first mortgage or look into a second mortgage. So you'd have two payments, two interest rates. Home equity line is like, for lack of better terms, it's like a credit card against your house. So you're taking the equity in your house with the line of credit, and that the bank will issue. You have a home equity line of credit for X thousands of dollars, and you typically pay an annual fee. With us, it's $65, and then you only pay interest on the amount of money you borrow.
Okay, so it sounds like cashing out would be a good opportunity if you're able to use that money wisely to pay down high credit card debt or something else that you can basically not get at such lower rate. And then
from the investment tool, we're also seeing people that will take cash out of their primary residence and use that money for a down payment on an investment home.
That's wonderful too. That's
and use that as a money making tool.
Oh, that's
or we've seen small businesses, small business owners take out some equity of their house as startup funds for
startup. Oh, so you guys hear that? So cash out can be used also for startup funds for your business, or even now when you looking for more cash, and also to invest in other investment properties if you're looking to get into the real estate market. And I want you to talk a little bit to Mark about the delay of mortgages now, since they're anticipating a lot of individuals are going to be having a lot of difficulties with the coronavirus. What are you?
A lot of that information is still coming out, but Fannie Mae and Freddie Mac, who are the two primary backers of most mortgages in the United States, you have some jumbo investors, which is above 510,000, with the bigger banks and investment companies. But primarily, they've said that they notice that there's going to be a problem. We are going to see some job loss, and they want to avoid a similar crisis that we saw in 2008, 2009 with the housing fallout. And so they're already making pledges to help. So what I've heard so far, and all this is still very preliminary, but that mortgage companies and mortgage banks are setting up hotlines to call in and talk about your hardship, so to speak. And there's a questionnaire, and if you qualify, this is affecting your business. Initially they're taking 90 days and tacking it to the back of the loan. It'll be interest. There will be no penalty for that. They're not reporting it to the credit bureaus as late, so it's not supposed to affect your credit with a ding with the mortgage late. And that's what we've seen so far. I think it's to calm things, and it's still evolving. And I'll definitely send you more information as it comes out.
Okay, wonderful. But it sounds like what each person has to do is just to call their their mortgage company to be able to see, what they're offering during this time.
I think first check their website, and most websites has a a red banner that says COVID-19 impact or hotline, and there's typically a number, or reach out to it's a good time to reach out to your mortgage banker or broker and just touch base and say, hey, how's this? Because that's a lot of the calls we're finding. Half our calls right now are, hey, what are rates? I want to look at refinancing. The other half are, hey, we did a loan last year. I'm now out of work. What do I do?
Mm-hmm.
And so being able to calm them and say, I don't know the exact plan in place, but here's what we're being told is that there will be some relief and there will be, sounds like banks are willing to work. Because, in the long run, banks don't want someone's property. They don't want to foreclose and have that on their books. They make their money off the interest and not off of, house flipping.
Okay. Is there anything else that I didn't ask you that you want to share?
I guess just offer reassurance that this isn't 2008, 2009. If you're looking at listing your home, still list your home. There's a booming, housing market out there. There's a demand for homes.
So you're still getting a lot of applications for new purchases as well.
Oh yeah. When rates go down, homes become more affordable, and where people back in the fall and last summer were in the high 3s, low 4s. Now they can get into a much bigger house or a better part of town for that same cost. Not knowing is I believe the worst information. When you know the information, you can make decisions based on that. So I would reach out to someone and look at getting pre-approved or seeing what you qualify for. It's a quick conversation, and usually your mortgage person will stay in touch and track that for you and say, because we're making calls now where it's like, hey, when we looked last time at refinancing, it didn't make much logical sense. What's your situation now? Here's where rates are. And have that relationship with someone to be able to make that call and know the information, know what you qualify or don't qualify for, or what you need to do to be able to.
Okay, awesome. So there's still a lot of opportunities out there, regardless of social distances. And are you working at home, Mark?
Oh, we are. We have been, and
nice,
I guess fortunately we're able. A lot of what we do is able to do
process, and people can still, call and so forth. So it looks like a lot of opportunities are still in new purchases, but a lot of people are able to release a lot of cash from refinancing, cashing out, and use that money to do a lot of things, from investing in their business to paying off high interest credit card debt, as well as I don't remember the third one that you had mentioned, but it seems like
use it as an investment tool.
Use it as an investment tool for those who are looking to invest in more real estate. And I'm gonna post your information below when I post this video, Mark. So thank you so much for sharing this information.
Thank you. And the last point I had is, I saw a figure that the average net worth of someone who rents is about $5,700.
For someone
the average net worth in the United States. Say again?
So someone who rents,
and the average net worth of someone that owns a home in the United States is $105,000. So, paying rent to someone is, a means to their end. It's that you're helping them save for wealth. But if you can look at getting into a house and building equity, plus, the tax benefits of owning a home.
Exactly.
Is that becomes, a huge investment tool for someone.
Okay, awesome. So increasing your net worth as well in America is through home ownership. So that's also an opportunity. So if you're still working and, social distances is working for you, then you can still also look into if it's time for you to purchase and stop being a renter, as well as if you want to go ahead and refinance. But I think that this guy is ready to wrap up. So, so thank you so much, Mark.
Thanks for spending time with me.
Post your information below, and you stay safe with your family and take care.
You as well. Take care. Thank you.
All right. Bye.